Welcome to SB Talks. Today is Tuesday, January 27th, and I am Vincent O'Neill, joined by our Chief Investment Officer, Nick Ryder. Welcome, Nick.
Thank you, Vinny.
Now, we have lots to cover today, from geopolitics, from Venezuela, Greenland, through the Middle East. We've got criminal indictment against the Fed and Jay Powell. We've got limits on credit cards. We've got risks of government shutdown, and that's just Trump's Christmas plans alone. We also have unemployment, positive news on unemployment data in Australia, and question marks over where the Reserve Bank goes from here. Welcome to all our listeners. Well, as we kick off in 2026, there's only one place to start, and I think that's actually to refer back to your Outlook report. And in some of the key themes for this year, you talked about national security and, I guess, threats or challenges or the disintegration of the old sort of rules-based system that a sort of America's overseen post-World War II. And it's just been a phenomenal flurry of geopolitical activity over the Christmas period, I guess, starting with Venezuela and the extraction of Maduro.
Yeah, I mean, it's hard to make sense of it. There's been a lot going on, and even the I guess, extraction of Maduro. I don't know how you want to characterize it, whether it's kidnapping almost. There was so many different spins put on it. It was all about oil. It was about arresting a narcotics, fugitive, and also potentially regime change. So I think maybe all of those things are true, but
partly
true.
It's
hard to know what the real motivation is, particularly because they seem to be leaving the existing regime largely in place. So there's obviously no signs of sort of regime change, which I think a lot of expatriate Venezuelans would have wanted. The oil thing, that's a little confusing as well. I mean, the oil infrastructure is so decrepit. It requires so much money to bring it back up to scale, to ramp production up from about 700,000 or 800,000 barrels a day to 3 million, which is where it was at its peak.
We certainly don't have the oil companies queuing up to go spend that money in that region.
Not until there's some degree of certainty about the political regime. And I think, was it Chevron or Exxon has already had their assets seized there or nationalised twice and lost many billions of dollars. So they'll be not in any hurry to go back.
Twice bitten.
That said, there are a lot of companies sort of looking at what they can do from it. It does reportedly have the largest oil reserves in the world, but the oil price is quite low, and it's not necessarily economic to extract it at $65 a barrel.
Yeah, and this hasn't really had any material impact on sort of oil price movement.
Not really. I mean, we did get a little bit of a spike. Probably also some of that was, due to what's been going on in Iran with the protests there. I think probably that's more people are more worried about that, particularly if the US was to strike Iran. I think we discussed this last year when there was possibility of them, Iran closing the Straits of Hormuz, where a lot of oil cargoes pass through. So you did get a little bit of a spike in the oil price just around the whole Venezuelan and Iran thing, but nothing too major.
Yeah, and sort of Iran sort of lingers there in the background, but if anything, it's almost like the US is quite thinly spread with how many activities that they have underhand that doesn't seem to be sort of at least on the radar right now.
No, I don't think so. And I think they realised there was not much that they could really do, short of sending boots, putting boots on the ground, So, yeah, I think
we watch that
space.
situation. So I think we take Venezuela and say, okay, well, that's been quite an interesting situation, but hasn't really moved markets that much. It's probably dominated headlines more than the... No,
I did write in the 2026 Outlook about the Trump corollary to the Monroe Doctrine, which was, the Monroe Doctrine was written, in the late 1800s, which really saying to a lot of Europeans, keep out of the Western Hemisphere, our sphere of influence, and so I think we're seeing a bit of a reassertion of that, trying to keep maybe China and Russia out of places like Cuba and Venezuela.
Yes, and of course the other big play on that front has been the ramping up of rhetoric around Greenland as well, which sort of really came to a head just ahead of Davos.
Yeah, that certainly caused some consternations in the international community. I don't think there was ever any serious threat of the US, invading
taking
Greenland,
military
taking
action.
military action. And fortunately, the threats of tariffs seem to have, Trump's backed off on those. There is a 1951 agreement between, I think, Denmark and the US that did give the US quite a lot of rights to have military bases. And at one stage they had 18 bases there and thousands of troops.
But wound it down quite a bit.
Wound it down. So, perhaps there's an opportunity for them to review that agreement, to modernise it, and to have a bigger presence there. But we'll just have to watch and see.
So probably quite a few unsavoury and unnecessary comments through that whole process, and a pretty heated standoff between NATO allies. But again, the world semi-shrugged that one off as well.
Yeah, I mean, the market's had a little bit of a wobble for a day or two, particularly leading into the Davos meeting last week. There was, the French were pushing their European neighbours to trigger this thing called the anti-coercion instrument, which would have been, potentially blocked a lot of US tech companies from operating in Europe. So it would have been quite aggressive. So it could have, disintegrated into a full-on sort of European-US trade war, which would have been pretty ugly.
It has been interesting, though. I think the Europeans have probably come together eventually through this Greenland. They were sort of forced to, well, many of them, I think the UK in particular, were probably trying to dance this sort of friend of Trump, but sort of still pro-European type line, and eventually they kind of got backed against the wall a little bit more.
Yeah. I think also Trump's comments about NATO troops in engagements in Iraq and Afghanistan, didn't help either.
Landed very, very flat indeed. Yeah, and rightly so.
Yeah, so I mean, it's look, we know Trump. He thrives on uncertainty, and can change his mind at a moment's notice. I think the latest thing I've read is he's threatening Canada with 100% tariffs because they're looking to do some sort of trade deal with China.
Yeah.
He's just recently lifted the tariffs on South Korea from 15 to 25% on cars, lumber, and pharmaceuticals because their parliament hasn't ratified the trade deal. So I don't think we're going to see an end to this anytime soon, unless we get the Supreme Court rule against the IEEPA.
What's the status? Where are we at with that?
Well, we're due to get a ruling sort of any day now. This is whether Trump is allowed to use the International Economic Emergency Powers Act, which didn't really give him the power to impose tariffs. The power to impose tariffs is really with Congress. That's a tax. So he's expected to probably lose that. Maybe some of these moves are ahead of that potential ruling. So we'll just have to wait and see what happens there.
We saw a further, I guess, step up in the conflict between the White House and the Federal Reserve with the formal launching of criminal investigations by the DOJ, which Jay Powell was very quick to come out and speak against.
Yeah, no, it was a good speech. It was he pushed back quite strongly, saying that, this was politically motivated. It really had nothing to do with the cost of renovations of the Fed headquarters, which, as we know, building costs have gone up, and particularly when you have things like asbestos discovered, you can get cost blowouts. So he's pushed back on that. And it's interesting, actually, a recent Deutsche Bank survey has found that 40% of respondents think that Powell will stay on the Fed
so even when he ceases being chair.
Exactly, when he ceases being chair in May. So this has probably made it more difficult for the White House to influence Fed policy. And we've also seen Trump really move away from the front runner, Kevin Hassett, saying that he wants to keep Hassett in his current role. So
with the administration.
Kevin Warsh and Rick Ryder, who's from at BlackRock, are now sort of the front runners. But once again, we didn't see much market reaction. Certainly the bond market didn't really react to any of that news, even though it caused a lot of headlines.
But we're not done there yet. We've had a few more interventions or activity in the markets as well from the White House. So we had a limiting of credit card interest to 10%.
Yes, a cap on credit card interest rates of 10%. Unclear how that will actually find its way into law.
Yep.
But he's asked, I think, one of the maybe the Housing Commission or someone like that to look into it. A lot of the big banks obviously pushed back on that, and they saw some equity share price weakness on the back of that. They just say that will just limit the availability of credit to top quality borrowers. So it's counterproductive. But it, for a Republican president, it's very much a sort of socialist policy. Like rent control. Yeah. So. We'll see where it gets to.
If it gets anywhere and where it gets to, yes.
Yeah.
And that's that seems to be just the flavour of the month.
Yeah, I mean, obviously Trump's approval is quite low. There's a lot of disappointment from his base that he hasn't done more to counter the cost of living, which was the primary concern that got him elected. He's been off, trying to secure Greenland and interfering in Venezuela, which is sort of, really against the, America First policy. So I think some of these moves on credit cards and also the limit of institutional buyers to buy single-family homes is really to try and kind of make
do
some
something
effort.
more populist moves, regardless of what the consequences of those might be. I might come closer to home if I can. Oh, actually, no. While we're still there, let's talk government shutdown, because that's quickly crept back onto our radar again.
Yeah, you might recall we had the government shutdown. They did a funding bill to the 30th of January, so that's due to expire. And with all these ICE shootings of US citizens in Minnesota, there's talk that the Democrats will push for another government shutdown, albeit a limited one that will only defund or stop funding the Pentagon Health and Home Services and the Department of Homeland Security. It could it's looking reasonably likely, and there are some Republicans that actually might side with that, particularly if it defunds the Department of Homeland Security, who are responsible for the ICE.
The ICE activity, particularly in Minneapolis at the minute, and capturing huge attention and huge uprising across the country.
Yeah, I mean, I think the latest news is that Trump's had a discussion with the governor there, Tim Walz, and it's been reasonably productive. So maybe they'll look to try and diffuse the situation.
Take some of the heat out of that one. But we're back there and potentially an extended standoff again.
Yeah.
Now, bringing it back closer to home, we had some positive employment data in Australia in the last week, seeing the unemployment rate drop from 4.3 to 4.1, which has turned a bit of a focus back onto the Reserve Bank and what our trajectory is going to be on rates. Yeah, so, in the last few months, the attention has shifted to, the economy doing reasonably well, the consumer, still spending quite strong consumer spending. There's still talk of not enough capacity in the economy to absorb some of this excess demand, and so we'll get a bit more information on that today from the NAB Business Survey, which does look at capacity utilisation. And then next week we've got the RBA meeting, and tomorrow we have the quarterly CPI reading. So market's looking for 0.8, 0.9 on a trim mean basis for the fourth quarter. That's not really consistent with a 2.5% inflation target. So that would probably put annual inflation around 3.3, up from 3. That could
could definitely lead to a rate hike next week. And we've got 16 basis points priced, so about 60-70% priced for a rate hike in February, and 2 to 3 hikes for the full year. So big difference to where we were a few months ago.
Yeah, absolutely. We'll watch this space. A couple of other things catching our eye. Just before Christmas, the Bank of Japan lifted rates to a 30-year high.
Yeah, they raised rates to 0.75%, and since then we've actually seen long-term bond yields really sell off. So the 40-year got up to 4.2%. That's the highest it's ever been. So really concerns around, inflation still a problem there. Their sort of super core inflation's running at around 3%, which is too high. And we had a meeting from the Bank of Japan last Friday. They kept rates on hold. Didn't really give a big steer onto when kind of the next hike will be. And so we've seen, this sell-off in Japanese bonds, sell-off in the currency until this weekend when the yen rallied about 3% from 158 down to 154. And there's been some rumours that the Bank of Japan, maybe in coordination with the Fed, has been trying to stop the yen weakening or to strengthen the yen. Because obviously a weaker yen is inflationary. They import a lot of stuff. So certainly interesting developments there. And then they've called a snap election for February the 8th with promises of a 2-year suspension of sales tax on food as a sort of populist measure, but that's obviously not good for their budget position. So the bond market doesn't really like that too much, and the currency market either.
Very long talked about the levels of debt, Japanese government debt there, so that's an interesting space. And last but not least, gold continues its charge.
Yeah, I think, it's caught up in the whole narrative around, geopolitical risk, concern around currencies, concern around government bonds. So it's all part of the sort of narrative. Partly there's also a narrative that major emerging market central banks such as the People's Bank of China and the Turkish Central Bank have been increasing their gold reserves to try and get away from holding US dollars and other major currencies, given they saw what happened with Russia having their foreign reserves frozen during the conflict. So there's part of this whole narrative. But for me, it just seems like a speculative bubble. I think it's a narrative that's captured a lot of attention and has led to a massive rise in the price of gold, silver, and platinum and palladium, which is really not necessarily a good thing. A lot of it, when I look at it, is ETF buying. So it's definitely retail. It's been driving a lot of it over the last sort of 6 to 12 months.
We've seen the queues outside some of the gold shops.
Yeah. And the actual demand for jewellery has fallen quite a lot, as you'd expect. So they've really taken over. The marginal buyer is the ETF buyer. It's certainly not jewellery buyers. That's fallen to about a third since 2021. But just to put it in context, I was looking earlier today at the forecast from about 40 investment banks. They had the gold price for 2026, average gold price at $4,200 an ounce, and the silver price at $50 an ounce. And today we're at $5,000 an ounce for gold and $108 for silver. So they look completely overvalued. To the extent that you can value these things. Can
be very sentiment-led.
Very sentiment-led.
And sentiment's been very positive. The momentum's been significant.
And the volatility of gold is 33, the annualized volatility. Now, that's double equities. So the VIX is 16. And the annualized volatility of silver is 100. So it's 6 times more risky than equities.
So you're saying be cautious around the expensive defensive qualities.
Yeah, I think, and also if you go back and you look at previous gold spikes, so the one in 1980, it took you until 2025, so 45 years, before you got your money back in inflation-adjusted terms. So you didn't make any return, including inflation, for 45 years if you bought it at the peak in 1980. And then the last time we had this sort of gold fever was, when the US dollar was dead after they started quantitative easing in 2011. And then once again, it took you 15 years roughly to make your money back in inflation-adjusted terms. So I'd be very cautious about going into gold or silver at these prices. Now, remember, silver is not something that central banks buy. It's not a reserve asset. So it's actually done even better than gold.
It has. Well, we watch this space. An excellent summary. There was a lot to get through there, but you've done a great job of taking us around the globe. Thank you once again, Nick, and thank you to all our listeners.